Good afternoon and welcome to the first Insight session in a special three-part series focused on West Africa, hosted by Standard Bank and Private Client Dining Club. My name is Will Grote and I manage the West Africa team for Standard Bank International Wealth and Investment. And it's my great pleasure to have with me a very distinguished panel of speakers assembled here to tackle today's subject, which is advising high net worth clients in West Africa. Although I have to note that the panelists and I freely admit to being Nigeria specialists first in the main and interested regional observers second. Those who have attended conferences in West Africa will appreciate the importance of observing proper protocol. So I would like to introduce to you now our assembled panel. Firstly, I'm very pleased to introduce Dan Agbo, Senior Partner at leading Nigerian law firm Udo Udoma and Bello Osagie. As well as his role as Senior Partner, Dan heads the banking and finance, power, private equity and taxation teams at the firm and has been involved in landmark deals across various sectors of the Nigerian economy. He also serves on or leads the board of directors for several major corporates. Dan, good afternoon. Thanks for joining us.
Good afternoon, Will, and good to be here with everyone, and thanks for having me.
Thank you, Dan. Next, I'm very pleased to introduce Esiri Agbeyi, partner at PricewaterhouseCoopers, Nigeria. Esiri has worked in a number of senior roles at PwC, spanning tax, mergers and acquisitions, private equity, and cross-border transactions. Esiri now heads the private wealth practice. Good afternoon, Esiri.
Good afternoon, Will. Good afternoon, everyone. Thanks for having me.
Thank you, Esiri. Next, perhaps a familiar face to some of our delegates, Alan Wood, Global Head of Business Development at Jersey Finance, having previously overseen Jersey Finance's business development work across the African continent, as well as in the UK and the United States. Alan is also a seasoned financial services professional himself, with a cool 25 years experience with top-tier UK banks. Alan, thanks very much for being with us. Good afternoon.
Good afternoon, Will. Thank you very much for inviting me to this webinar.
Thank you. Finally, my friend and colleague, Kazmi Hassan-Bokus, Business Development Manager for Standard Bank's Trust and Fiduciary Services business. Kazmi has significant experience working with clients to structure family and business assets across borders and with a particular focus on Africa. Kazmi, good afternoon and thanks for joining us.
Good afternoon, Will. It's a pleasure to be here. Thank you.
Great. Well, thanks everybody. And to start us off, given the wealth of Dan's experience, who better to give some opening remarks to start today's session? So Dan, over to you, please, sir.
Thanks, Will. I'll just talk through a couple of slides that I'm hoping will provide a bit of context for where the global economy is and also where Nigeria is at the moment, as Nigeria sits within the global economy. So look, it's not often that one gets to live history, but we are living history at the moment with the COVID-19 pandemic. And even though this conversation is not about COVID-19, I think it's impossible to consider the fortunes of the world or Nigeria in 2020 or 2021 without taking into consideration the effect that COVID-19 has had and is likely to continue to have. So in terms of economic growth, as you can see from the slides, the global economy is expected to contract by 3% and possibly north of that number, with negative growth forecasts for most major economies. The current number for Nigeria is a negative 3.4%. And this is up from an estimated 2.5% growth in GDP. And I'll talk about this a little bit further in a second, but a lot of the Nigerian economy is driven by petroleum. And crude oil prices have fallen significantly. The benchmark West Texas Intermediate down for June futures down to $37 odd a barrel from $60 a year ago. Brent crude has fallen about 62% this year. from $66 a barrel to $25 a barrel for June futures. And I think the expectation is that prices are going to remain depressed certainly for the rest of 2020. In terms of the markets, most industries have experienced disruptions, either due to lockdowns in country or due to lockdowns in other countries that produce inputs to manufacturing that are also affected by the disruptions to those local supply chain. These declines are mirrored in the performance of the Nigerian stock market, again, as you can see from the next slide. The role of crude oil and the role in the Nigerian economy is actually an interesting one, because in terms of GDP, the petroleum sector today constitutes less than 10% of the country's GDP. But the problem is that it constitutes a disproportionate proportion, so to speak, of the total government's revenues. So typically revenues will come from tax. Nigerian government revenues will come from tax. A large proportion comes from petroleum tax. A significant proportion should also come from VAT and other taxes, companies' income tax. But Nigeria has very low debt to GDP ratios, and so consequently, a decline in the price at which Nigeria sells its crude oil significantly affects the government's ability to provide services. Even more critical for the private sector is the fact that crude oil earnings from the sale of crude oil account for north of 80% of Nigeria's foreign exchange earnings. And so that means that when prices go down, availability of foreign exchange is constrained, and that has a knock-on effect throughout the private sector. Nigeria's foreign reserves have come under pressure. Before the lockdown, before COVID-19, the exchange rate was in the region of about 320, no, just over 300, I think it was. And the official rate is now at about 361. And the quote unquote parallel rate is now as high as 460 naira to the dollar. So again, this is resulting in significant domestic inflation. So that's the context against which we're viewing Nigeria in 2020, and indeed looking at the world. Will, back to you.
Dan, thanks very much for those comments, and I think really sets out the challenging situation in Nigeria, in West Africa, and across the world as we grapple with COVID-19 and the knock-on effects of all of the travel disruptions and containment measures. So thank you for setting that out. To start the panel discussion, I would like to start with Esiri and also back with you, Dan, just to take us back before COVID came and changed all of our lives, and give us a sense of the size and the vibrancy of the Nigerian population, the Nigerian economy, and where individuals have been able to accumulate significant wealth over the period up until this COVID patch. So, Esiri, if I may start with you, please. I'd just be interested to hear from your experience, having worked with industry, having worked with private clients, which sectors have been the powerhouses of the Nigerian economy? Where have private clients been able to accumulate significant wealth over recent years? Thank you.
Thanks, Will. I'd say that I've seen that largely from the manufacturing sector, manufacturing of consumer goods and industrial products. And that also sits very nicely with, what the GDP speaks to. About 21% of the GDP comes from agriculture, 25% from manufacturing, and a huge 50% from services. And that's, I think, a recent change from what we used to see in the past, where almost everything was from industrialization. So manufacturing definitely is where we're seeing a lot of wealth distribution. And I think the easy answer also is from the richest man in Africa, getting most of his wealth from the manufacturer of cement. But I think post-COVID, we might begin to see some changes. And that's also bringing a new boom to, a different sector of billionaires or millionaires. And that's going to be from the service sector. So there's going to be a lot of changes, I think, with technology. We're already seeing that drive with a lot more entrepreneurial young minds, coming up with new and innovative products in payment services, the banking industry, and finance. So there's a lot of boom as well in the fintech space. And I think we'll continue to see that. The oil and gas industry did have a significant chunk of that wealth in the past, but that might begin to dissipate. And I think what drove that increase was largely from the local content laws that were passed, in Nigeria, that brought up a new group of billionaires or wealthy people. So it's spread across the oil and gas sector, the manufacturing sector, to some extent the agri sector. But even for the agri sector, a lot is still to be had around innovation and industrialization and just technology around farming as well. So we believe that a bit more growth in that space. And like I said, services definitely will continue to contribute a significant chunk as well.
Thank you very much, Esiri. Dan, if I may ask, as you see the landscape, Esiri there spoke to a bit of a transformation moment where we have legacy industries that have driven significant wealth, touching on perhaps the declining importance of oil and gas and the always important manufacturing sector, but also looking ahead to technology companies, fintech, financial technology coming into play. As you see things, do you feel that we're in a transformation between old industries and new, or is there a continuity between where individuals have made their money in the past and where they're likely to do so in future? Thank you.
I think that we are in a transitional time. I think that a lot of private wealth has been made by historically in Nigeria, been made by entrepreneurs that have provided services to the federal government of Nigeria, to state governments, and has also been made by people that have provided services to the oil and gas industry or been entrepreneurs in that sector. Now, with crude oil prices residing where they lie now, and with the demand for crude oil likely to be depressed certainly for the short to medium term, and this is even leaving aside conversations about whether or not we're going to proceed to a future that is focused around electric cars. I think of necessity, private wealth is going to be coming from new sources. Esiri commented on the proportion of our GDP that is accounted for by what I would broadly term as services, and this catch-all category includes things that includes technology, the technology piece, the sort of thriving technology ecosystem that we have in Nigeria. It also includes the thriving Nigerian art scene and film industry. These are all relatively small contributors. Some of these are small contributors in the aggregate, but it is building up. And I think that this is where new wealth is going to be found. So if I take the derived valuation for a Nigerian company called Interswitch, for instance. We had an investment in Visa made an investment in Interswitch. And if you just extrapolate the value of Visa's investment, that at the time valued, this is a Nigerian company at over $1 billion, so effectively the first Nigerian unicorn. And right there is wealth being created in non-traditional ways. But these non-traditional ways, as I said, are still significantly dependent on, or some of these non-traditional ways are still dependent on the availability of foreign currency. And so while I think that there is certainly a medium-term to long-term future, I think in the short term, everybody's going to be struggling to figure out how to deal with the current constraints.
Right. No, thanks very much. And I think you both touched on some interesting points about the entrepreneurial DNA, I think, of the Nigerian business community. And I wonder, Esiri, if you would agree, if I were to summarize, to say that there have been a lot of successful businesses grown in Nigeria in recent years, but for savvy entrepreneurs or people with an entrepreneurial mindset, there are still a lot of opportunities to harness some of the technology innovations that are coming on stream, and marrying those with some of the older sectors where perhaps there are opportunities to improve efficiencies across manufacturing, agriculture, and so on. Would you agree with that?
Yeah, absolutely. And I think most of the manufacturing concerns, have pretty much been tested this period. Some issues to do with supply resilience, whether or not, for example, we should be automating some part of the manufacturing value chain. And so we think that would drive a lot more efficiency, and that should also drive innovations in that space. Some of the issues we even saw was just transiting in the retail space from your traditional retail outlets to just selling things online. And some of the innovations we saw, despite those not being real innovations, were around using WhatsApp platforms to sell things. I mean, that's entrepreneurial in the sense that you only had a very short time to accommodate that change. But I think this gives room for a lot more innovation around retail platforms, which I think should change. Over 90% of the retail market is still pretty much traditional, where there has to be face-to-face interaction to buy and sell goods. And I think that's a huge space that absolutely needs to change, and I think we'll see a lot of change in that area.
Thank you. And just one last question in this area before we move on. Esiri, could you explain for me what a side hustle is, and how seriously we should take the side hustle in discussions about the Nigerian economy?
I think you should take the side hustle comment rather seriously. But it's a pop term, and it's one that's used by a lot of younger folks, those in paid employment who then have to do jobs outside of their regular paying jobs. So they have businesses that they run on the side, and that brings in additional income.
Thank you.
Now, with remote working, taking the space in the work industry, I think we might have a lot more of our employees working from home, and side hustles will begin to increase. And if they do increase, we might see, significant increase in industries as well. So, yeah, you should take it seriously.
Well, okay, I certainly will from this day forward. So thanks very much, Esiri. I'd just like to move on now and have a look at, having heard that lovely introduction to the Nigerian economy pre-COVID and now, I just want to turn towards Kasmi and Alan and just ask now about the key planning areas and planning opportunities where professional services firms can add value and help clients from the West African region deal with issues that are particular to this market. So, Kasmi, if I may, I'd just like to start with you and ask what planning needs, in your experience, do clients from the West African region at large have that is particular to them? Thank you.
Thank you, Will, for the question. What we've seen historically coming out of West Africa, generally as a region, is one of economic cycles driving the wealth conversation we have with clients, meaning that you would have a string of years of plenty punctuated with maybe different ones where the cash flows are not quite the same. The opportunity here, Will, is for professional firms to assist clients navigate some of the complexity around owning assets in a jurisdiction that is not theirs, while at the same time getting comfortable with some of the planning options that certainly then become available. It comes to mind here around maybe simply having a Jersey will to cover Jersey assets, which would allow for heirs to access liquidity much easier than any other type of planning. If clients are looking at maybe more intricate solutions for a more flexibility and with a much longer term to it, then we certainly see the use of offshore trusts being very prevalent when it comes to holding some of those offshore assets. And the interactions that clients have with professional firms in terms of placing their personal circumstances in the midst of a lot of potential complexity. I'm thinking here of the UK tax rules around owning property in the UK. Professional firms to help clients navigate that is certainly very well received by West African clients.
A very interesting observation around economic cycles and compared to some other client groups, this tendency for years of plenty and then tighter economic cycles. And I would certainly echo from my experience that this is a very, very relevant area for professional services firms to keep in mind. And usually there is an opportunity here to help clients plan their current cash flow, which may be coming, as you say, in cyclical fashion, in lumpy fashion, with predictable long-term cash flow requirements such as family education, housing, mortgage repayments, and so on. So I'd certainly agree with that observation. And you also touched on an interesting area, which is around this international diversification of wealth, and therefore the situation where clients can build up assets in a number of different jurisdictions over their life, and the need, therefore, to plan in such a way that allows for those assets to be held safely and ultimately to end up with the beneficiaries of their choosing. I would just like to pick up now with Alan, given your expertise in this area, and just ask, why is it important for clients to consider which jurisdiction they use to set up their holding structure, should they have one? Thank you.
Yeah, no, I think it's probably important that I just mentioned that I work Jersey Finance is a promotional body, so I'm representing the members, and they're all financial services companies across Jersey, so banks, asset managers, trust companies, and primarily I've spent a lot of time on the ground in Lagos. I think I'm almost like formally adopted in Nigeria now, having spent 6 or 7 years traveling down, and I know Siri Dan very well. But I think from a wealth owner perspective and a Nigerian perspective, I think when you're structuring a trust or a private trust company, or even if it's simple banking facilities or asset management portfolios, I think looking at the jurisdiction is equally as important as the product or the provider. And I think it's important that the IFC, in our case in Jersey, that we truly understand the needs and requirements of high net worth individuals. And that would generally be wealth preservation, asset protection, privacy, and more recently, philanthropy, but moving into sustainability and impact investing is becoming an interesting topic. But I think from a Jersey perspective, there's probably 5 key elements of things that people should consider. So country risk mitigation is one, and we see that across emerging markets and why people look at international finance centers. a tax neutrality platform. So while it's tax neutral, exchanging information through common reporting standards and having a transparency agenda is important, but that tax neutral platform is critical. Jurisdictional neutral as well, so that people are having assets in a jurisdiction that they're comfortable with and has got a long history of wealth management. And then the strong regulatory environment and rule of law is critical. So a jurisdiction where there's case law, particularly when people are setting up maybe family offices or multifamily offices, they are confident that the jurisdiction can resolve resolutions if they come up. And then expertise in simple wealth management. So having a broad skill set from a legal perspective right through banking and asset management into the trust and corporate service world are all important elements that people need to consider.
Alan, thanks very much. Thanks very much for that overview there. Just a final question in this area, Kazmi, if you don't mind my directing towards you. Given the opportunities for really fantastic wealth creation and returns on investment in various economies in West Africa, and we're talking about the rapid increase in land values, double-digit returns on fixed income, and the opportunities to create businesses to take advantage of some of the gaps that Assyria and Dan highlighted earlier. Just a question, how do you find clients respond to investment opportunities offshore, which may typically have a lower rate of return, so perhaps low single-figure returns? How do you find those conversations with clients when they're used to very high returns in their home country and then trying to position a slightly lower return but perhaps safer investment offshore? Thank you.
Yes, very interesting question indeed. Well, certainly our clients, typically entrepreneurs, manage risk and volatility in their day-to-day life, running their businesses in West Africa. And when it comes to the offshore investments that they tend to make, however, it's more wealth preservation that tends to be driving the conversation there. So, and that reflects itself in, for instance, the ownership structures that clients would tend to go for around those offshore assets, while they would tend to be individual shareholders of their Nigerian or Ghanaian company. When it comes to that offshore wealth, you tend to see clients asking for the beneficial ownership of those assets to sit with their family members, with wives, children, and even the next generations. And that prompts a reflection that in those clients' minds, it is really to be able to stretch that wealth as far along the line as is possible. And that is probably best achieved while taking a more conservative view of wealth than they would typically take while operating their businesses in country. And I would add to that as well, not only do we see that come out when structuring the wealth, but when clients decide how this wealth should be managed. For instance, if we apply that to UK property, clients certainly value the fact that these assets are being professionally managed. They value the fact that someone's looking after whether the certificates are in place. Is there a protocol around times when, like now, tenants' ability to pay rent is certainly impacted? Are the regulatory obligations being observed? So certainly the fact that wealth preservation and structuring is top of mind there, we see clients' willingness to go for more conservative types of investments in terms of property, in terms of portfolio investments that are properly balanced in order to mitigate a lot of that country risk that they are exposed to on a daily basis.
Kazmi, thank you very much. And I can relate to a great deal of what you're saying there. I just want to move back now and look back into the West African economies themselves, and again keeping our focus on Nigeria in this particular conversation, and bring up to date by looking at the effect of the COVID-19 pandemic on those economies. And if I may come back to you, please, Dan, and just ask, in recent history, has Nigeria, for example, been able to see off other economic downturns of this magnitude or similar? And with that in mind, are there still opportunities in the COVID and onwards world for profitable investments in the region?
Interesting question, but look, I think that the last time anybody saw off this sort of challenge was the Spanish flu, and I suspect that the people that were actively involved have long had their day. So this is entirely new for both Nigeria and for the world. The 2016 recession in Nigeria saw GDP decline, I think, by 1.6 or thereabout percent. This is likely to double that. So we're in pretty much uncharted territory. Crude oil prices are going to be low for a much more sustained period than we experienced in 2016. The lockdown that we just was experienced in Lagos, and the reason I'm focusing on Lagos and Abuja, we had a lockdown that focused on Lagos and Abuja, significantly affected the economy of Lagos. And if you consider the fact that Lagos accounts for 30% odd of Nigeria's GDP, that has a significant effect both for this economic number, as well as for the livelihoods of the people who live in Lagos. But having said that, if I turn to the last slide that I have, that slide that slide speaks to impact, and it was a slight modification of a slide that I saw in a different presentation. The slide speaks to impact across different, for want of a better term, industries. So small impact in green, moderate impact in yellow, and large impact in red. And when you think about the sectors of the economy that have had a small impact, those are probably the areas where I think the greatest opportunities might exist. So if I were looking at where to put my money, I'd put my money in telecommunications. I'd put my money in food, especially in the manufacturing of food that substitutes for products that were previously imported. The converse of that is when I look at the sectors where there is there's likely to be a significant impact, I probably would not be putting my money at this time in real estate, unless I'm making a strategic play, a strategic long-term play. But if it's a short-term play, I probably would not be putting my money in real estate. So just to say that there are opportunities at the shorter end of the spectrum, and depending on your time horizon, I think that there are opportunities. COVID-19 will bring opportunities for those that have capital and that are prepared to wait for a couple of years to get the right return on that capital.
Thanks very much, Dan. I think you've reminded us of an old maxim that at times like this, cash is king. Those clients who have a bit of firepower are in a position to take advantage of some particular opportunities that the COVID pandemic has brought up.
Mm-hmm.
Esiri, as you see things in your private client work, your private client practice, could you give us a sense of what's on your clients' minds? Are they approaching you for advice at the moment to help them hunker down and consolidate their position? Or do you also have some clients who are looking to take advantage and expand in this very particular market conditions?
Yeah, so I think I've seen mixed views from clients, and some of them ranging from philanthropy. So a lot of family businesses have been very involved in just giving this period and not necessarily thinking of what gains, could be made from all the gaps created. But I've also seen some asking around, where are the new areas I could invest monies in just to balance my portfolio. Having seen or witnessed a shrunk in values, this period. Some of the great ideas we're also seeing is around just getting the next generation very involved, because I think a lot of the current generation is now more convinced that handling businesses the traditional way is probably not the way to go for the next 10 to 20 years. And we've seen quite a number of the old generation being very stubborn in accepting, proposals from the next gen. So we're seeing the next gen being considered a bit more now, and being given the steers around innovation within their companies. Another thing we're also seeing is a lot more, would I say, focus on what we have now, what has been transferred down to us by way of either wills or just because, someone passed on in the family. And have we witnessed any devaluation in the wealth we have? So should we be diversifying our portfolio? And so there are questions around where should we be investing outside Nigeria, because we've witnessed significant foreign exchange depreciations in the values of our assets. And I think that's where the questions around what kind of asset portfolios should I be investing in outside the country is now beginning to rise up. And I'm seeing more of that. So those are kind of the views I've seen from my clients. And I think diversification will definitely be one to look at, so that we're not joking our wealth in Naira, but we're trying to get a more balanced outlook to our portfolio, to a lot more innovation with the next generation driving it, and three, a lot more efficiencies around traditional businesses.
Perfect. Thanks very much, Esiri. And there's real signs there of, as you say, maturing ideas in the business community around diversification and being open to innovative ideas from the next generation of business leaders and family members from an advisory point of view, family members coming through there. Thank you. I think just to round up the this panel discussion, I wanted to turn on to some challenges that professional services firms have when advising clients in the West African region. And I'd like to start, first of all, just by addressing the question of risk. And in your experience, what types of risk should firms be aware of when advising clients in the region, and how might these risks be handled? So, Alan, if I may, I'd just like to turn that question to you first. Thank you.
Yeah, no, absolutely. So I think from our members' perspective, Africa has been a big part of our DNA in Jersey for a long time, and it probably started with the South African banks and Standard Bank decades ago, setting up on the island. So we have a lot of interest in the three big economies, particularly, and then in other African jurisdictions. But coming back to the West African element, we've seen an element of flight to quality from some high net worth clients, and sort of bringing their assets under one jurisdiction rather than having them scattered over a lot. And I think it's fair to say that West African clients are a lot more willing to comply with the stringent KYC regulations that centres like Jersey have in place from a regulatory environment. So source of all sorts of funds, people are happy to go through them process because they understand that they are structuring their assets in the right way, in the right jurisdiction for the benefit of their family and heirs in the future. So, historically we might have had a challenge, but I think the transparency agenda has really pushed that along. And I'm sure, sort of particularly Standard Bank have seen a lot of them clients coming through their doors as well.
Thanks very much for those comments, Alan. And Kasmi, from your point of view, when we're talking about risk in a client advisory point of view, what sort of risks do you have in mind, and how do I was going to say, you and your colleagues, how do we and our colleagues address those in business?
I would resonate some of Alan's thoughts there, Will, in terms of the biggest one mentioned, and which is probably fueled by compliance officers generally, is that of CDD, customer due diligence around clients operating in that region. And it really has to do, at the end of the day, with a firm's, a service provider's risk framework. And it might be useful to mention that as a financial services group, the Standard Bank Group has adopted all FATF and EU recommendations, as well as all best practice with regards to managing AML CFD risk, and which has us then using a risk-based approach in terms of how we approach this subject with our clients. And the great advantage that we have is to be able to leverage this great network that we have both in Nigeria and Ghana, if we want to focus on West Africa, to leverage on those relationships that our colleagues have with clients who they've been banking for a number of years, have great insight into their businesses, and being able to draw from that and comfort our compliance officers around some of those particular risks. I would also add, Will, the fantastic work that you yourself and your team do bridging the region and our bases in London and Jersey, in terms of very frequently traveling to that region, sitting with clients, understanding the background of the family wealth, visiting some of their offices, farms, or manufacturing plants, and being able to come back and say, look, I've been there and I've seen it. And that is sometimes something you can't quite find on an internet search. So that certainly goes a long way, as well as all the very frequent interactions that I know we have with clients who visit London from West Africa. So, and this approach works extremely well with West African clients, because West African clients, being warm people generally, are very engaging in nature and not ones to turn down the offer to meet for a cup of coffee or for a meal, where you get acquainted to them and develop that proximity that is so important to be able to then appreciate what risks one is exposed to or not.
Well, can I just add to that point?
Yes, please, Alan.
I think one of the things that I've learned, and many of our members, trust is particularly important, and to develop long-term relationships. And Kasmi's point about being on the ground and building up them relationships, you can do it through London, but more and more of our members are traveling into Nigeria and building up them trusted relationships, and particularly with complex clients, where it can be quite intrusive to understand what their real long-term needs are. So yeah, just wanted to echo that, what Kasmi is saying.
Thanks very much, Alan, and I agree with both of your points. There's two words or two themes stand out. I think one is trust. I think having that trusting relationship between the advisor and the client, that advisors are acting in the client's best interest and helping them through a process. And then the other theme you touched on was around local knowledge. Myself and many of my colleagues in the wealth and investment business have been covering our respective markets in West Africa and elsewhere for 10 years or so, spent years living in the market. And I think that allows a business, and that's just for the international travelers, I think in partnership with local firms and local contacts, just allows a firm, I think, to be a lot more discerning and understanding in the question of risk, avoiding issues before they arise, and understanding what a client is explaining in terms of how they've made their money over the years. So thanks for those reflections. Just one last question, if I may, before we wrap up the session, which would be around challenges around tax and tax compliance, and what I think in many clients' minds is becoming an increasingly complex landscape to navigate. I think whether you're looking at US Foreign Account Tax Compliance Act, common reporting standards across a much larger group of companies. Even in Nigeria, the VOADs, VADs, and other tax initiatives that have come in, there is, I think, a great deal for clients to potentially fall foul of through no fault of their own. So I just wanted to ask Esiri, from your experience, what are those tax challenges that clients need to get a grip of, and how can professional services firms help there?
Yeah, so Will, I think those vary across, just having the right structure to do your business, the right mix in terms of, whether you have equity or debts introduced, how leveraged should you be? Because we're seeing a lot of changes as well in those areas. Whilst we may not have so many changes in our laws, because we don't have those amendments every year as you would find in other jurisdictions, you might find that there are changes to the practices of the law. And so paying attention to how that's interpreted locally is very important. There's been a flood of resolutions around conflicts or disputes on tax matters. Staying in touch with those also very useful in trying to mitigate some of the risk we see in tax. There are also challenges just around the technologies for complying as well. And whilst the tax authorities are trying to, bridge that gap with new platforms for, remitting those taxes, it's a difficult journey, and something that can be very hazardous for private clients. So we try to fill that gap as well. So I would suggest that, take a long-term view always with investments. Tax planning, very important, especially where you have a mix of citizens within a family, whether they're US citizens or UK citizens or, other countries outside of Nigeria, and just staying in touch with the updates in those other jurisdictions and not just Nigeria alone. Because as we see, there are a lot of Nigerians who are acquiring dual citizenship, a lot of West Africans also doing that. And once you have a US citizen in the family, it changes the structure totally for holding your assets, whether it's a foreign grantor trust or foreign non-grantor trust that should be set up. Those are questions that should be asked early on. And then that has to be revisited on a regular basis so that if there's any need to change those structures very quickly, the structures should be very flexible and nimble to accommodate those changes. In terms of investments as well, should we be introducing more debt? A lot more countries are introducing thin capitalization rules. Transfer pricing is a big issue as well across Africa. And that's an agenda that's being driven by the Africa Tax Administrators Forum, as well as OECD. So that's as well that needs to be looked at.
Esiri, thanks very much. That was absolutely eye-opening, I think. And if I ever get the chance to move back to Nigeria and my side hustle takes off, I will certainly be calling you to help me navigate through all of those points you've just highlighted there. So thanks for that answer. And thank you to all the panelists for some brilliant contributions on a very whistle-stop tour of advising clients in West Africa. I think it's been a very helpful reflection on not just the current challenges of COVID, but the vibrancy and dynamism of the economy leading into this current situation, and the opportunities that still remain for clients and businesses to make significant wealth in the region, and above all the point that we touched on around the importance of great trusted relationships between private client advisors and their clients to add value at every step of the way, so that clients can really make the most of all the opportunities that are out there before them. So thanks again to all the panelists, and we now have a question and answer session. Thank you.